All right. Good evening, everybody. So this will be one of the best videos I have actually uploaded, not because it is the best, but because um in my little years of experience, though 12 years counting, I have discovered something that um trading is actually real life experiences that deals with principles of success. So what do I mean? Uh, I know the academy, Trade2Win Academy, tries to teach and give a lot of information on how to succeed as a trader, right? On how to succeed as a trader. But beyond that, one of the things or one key element that has really worked for me is focus. If you go on YouTube channel, including this video you're currently seeing, you would find more than a million strategies on how to trade the financial markets. Is it that the strategies are not working? They are all working. But for you to be confident about something is for you to have an experience with it. And it's for you to have seen some level-based results. Now, if you have to jump into trading without the experience, it means you have to backtest to get a demo experience. It's like living a previous life, uh, trying to sort your way out of challenges you could possibly face, which you are seeing I don't know how I'm going to put it, but you understand what I'm saying. But in this case, everybody is trying to make money and it's not easy, I understand. So if you have to use any strategy, as much as I'm not a big fan of backtesting, sometimes you might discover something during backtests that would give you the leverage to do better than even your teacher. It's during backtest we see, okay, this could possibly work. But beyond backtest, the greatest backtest is when you start trading live. You face real life challenges, emotional challenges, and all that. Everything just hits you. Okay, so I don't want to bore you, but if you have to succeed, you need to trust the system. And why is this video also very important? Because it is systematic. It is what? Systematic. It has, I think, every key component that when you go through it, uh, by the end of the video, you should be happy. So why, so let me just put it here. Why is this different? Now, I'm not a big fan of multi-time frame analysis, but one of those key things that help people succeed is the fact that they know what is happening upwards, they know what is happening downwards, they know what is happening in the large time frame, they know what is happening in the smaller time frame. Although time frames are fractals, fractals means whatever is happening in the smaller time frame are just little segments of what is happening in the bigger picture. All right, so that's why I prefer trading M1, M5, and all that. So, but why is this particular video different? Because it is multi-time frame. Because it is multi-time frame. So this is one. Because it is multi-what time frame. So why two? Because it is systematic or rule-based. And I'm going to be explaining. Three, it requires certain fundamental, fundamental concepts, such as FVG and liquidity. And then 4, it comes high level confidence. Why? Because it is systematic. All right, let's go into the chart. As to every trader, you want to really know how to buy effectively and how to sell effectively. So we won't be needing this. So what are the rules? First, we need to put down the rules, all right? So rules for following the system, rules for following. Or just let's just say rules to follow. Number 1, daily time frame FVG should serve as the people. Number 2, 1 hour time frame should serve as the entry. Number 3, series of inducements must be shown on the 1 hour time frame before the on the one hour time frame before the FVG. Number 4, entry can be there. Now, as simple as this is, I'll be showing you 2 ways to follow this system, all right? 2 ways to follow this system. Just relax. Don't be in a hurry. All right, so the first way is, let's assume the market is in an uptrend on the daily time frame. So all we need to see is, for us to know if we are going to buy or sell, there is an indicator that plots the daily FVG for me. Red for sell, blue for buy, right? So you don't need to stress yourself about doing it yourself, okay? All right. So let's assume this, of course, is colored green. We are expecting price to fall into this level. Now, whether or not you're thinking towards buying or selling, for this strategy, don't stress yourself trying to look at the trend of the market. No. Your bias is the FVG. If you see a bullish candle on the daily time frame above the FVG, indicating that, okay, I think we're trying to go upwards. Remember, the bullish candle must close above the FVG. All right. Now, when this has been shown, you switch to the 1 hour time frame. And what are you looking out for? Price retracing to any FVG. Remember, the FVG bias here is green in color, signifying a buy, isn't it? The FVG, which we see on the daily time frame, this is the daily time frame. So just keep note of this. This is the daily time frame. And then over here, we have another box, the 1 hour time frame. I'll just make it a bit simpler. Cool. All right, so this makes sense, I believe. All right, so on the 1 hour time frame, we need to see price presenting another bullish what FVG. Don't worry, I'll show you live examples. And then creating series of inducements before it gets to the FVG. What do I mean? We need to see this, 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 and then if we see a free fall such that price just falls to the FVG without necessarily creating inducements. Inducements are like steps, all right? Yeah. So let's just go back. Let's put those steps again. Now, if we see this being created, remember this is the 1 hour time frame. So let me, sorry. Daily. So let me just keep it at the top, all right? Then why this is the 1 hour time. So this is the what's 1 hour time frame. All right, so we have the daily time frame and we have the 1 hour time frame. This is just what we are looking out for. All right, this is just what we are looking out for. Now, how about the sell? Let's assume this is a daily time frame. Let me just keep it here. So it doesn't matter if the market is going down or not. But the most important thing is we could spot a bearish FVG here. So I'm going to use that. So a bearish FVG here. And then we have a bearish candle closing below the FVG. All we have to do is this. All right, so on the 1 hour time frame, we want to see, let's assume the FVG was here. We want to see price creating steps towards the what FVG. So we want to see this. Remember, the FVG is presented on the 1 hour time frame. And then the moment a bearish candle forms and closes below this, you take a sell and then your stop loss above the FVG. So this is both the buy and sell examples, right? Trying to see if there's any place I can save this. All right, so I saved the picture there so that I could send it to you guys so that you just have a copy. All right. So this is all there is to know. We'll be looking at the chart and then we'll be looking at the examples, some trades I took and all that. So let's look at this. So let's get the settings for the indicators. The indicator I'm using is ICT MSS. It just points out the liquidity for me. So let me take away these guys. I think we don't need them. All right. So, and then this is the FVG. So these are my settings. Not so much. And then the ICT, this guy shows all the liquidity. These are my settings. All right. So let's start again. This is the daily time frame, isn't it? Now, wherever you see red colored FVGs, you just understand that if price gets to these levels, you are expecting a sell. Now, these gray FVGs are already, so let me just make the bullish FVG green when it's been mitigated. All right, so that it makes more sense to you guys. So for bearish FVG, let's make it red for the purpose of this class. All right, so now I put a line here. You can see here, and all that. When price got to this area and got to this area and closed above, you see price closing above, you see price closing above. I marked it, and then I went to the 1 hour time frame to spot what? A bullish FVG. Now, on the 1 hour time frame, after price has gone up, any other FVG which you could see here, price didn't tap. Look at this particular one. It's very, very minute. So if you notice, you would see an FVG here, but it's so faint. So price didn't get there. But I'll show you how I was able to take the trade. Now, because I have this slight experience, if I don't see entries on daily and 1 hour, I could use 4 hour and 30 minutes. So if we go to the 4 hour time frame, work with me. What are we looking out for first? Price getting to the what? FVG. As you can see on gold, 4 hour time frame, you can see that price is already reacting at the 4 hour FVG, but the line of study today is the daily FVGs we are using. So if we were supposed to use this, we would look at what? 15 minutes. All right, 15 minutes. We will look at for bearish FVGs if we wanted to enter gold. So if there were bearish FVGs available here, of course, I would look for an entry if I was using 4 hour as my bias. But let's go to the 4 hour, and then you'll see how I got this trade. I think this was on Monday. So when price tapped into this FVG and moved upward, I positioned myself saying, okay, cool. We are looking at buy setups only. The only time you get to look for sell setups is when price gets to the bearish FVG, and then you switch to the lower time frame. So it is FVG to FVG, bullish FVG to bearish FVG, bearish FVG to bullish FVG, bets on the higher time frame. All right. All right. So let's continue. So we have price reacting at an FVG here. So how did I get this particular trade? If you use 4 hour, you switch to M15 or use M30. So let's go to M15 and look at this. Now, on M15, remember what I told you. Before price gets to FVG for the sell setup, so let's assume on 1 hour or M15, remember this is the buy setup, okay? We need to see what steps being created. We call them inducements. And then move upward. So we need to see this taken, more like price is moving towards the downside, more like a trend in the lower time frame has begun, but a sell trend. However, we are looking at the buy FVG, which held strong. Remember, it has already reacted in the past. You see, already reacted, whereby if we go back to the 4-hour, this was where we kept the line signifying that, okay, it reacted to a 4-hour FVG. So, but when we got to the M15, you could see this clearly. So we have price doing this. As long as it keeps creating the steps till it gets to the FVG, and then we could place a buy trade. So where are we placing the buy trade? Here, at the tip of the FVG after the first count. So you could be doing for conservative entry, you could just wait. Sorry. So for conservative entry, you could wait after the bullish candle has formed, then you take a buy position. Does it make sense? All right, let's look at some trades we took. I think that was on GBP USD. GBP. All right. So we go to what? 1-day time frame. Now, on the daily time frame, can you see this? A bearish FVG presented itself to us. And what happened? We had a bearish candle that tapped into the FVG and what? Closed outside, indicating that, okay, cool. We have positioned ourselves for a sell opportunity. So, since this has occurred over here, I won't bother looking for buy setups. I will just focus on looking for what? Sell setups. And then we switch to the 1-hour time frame to look for what? Fresh FVGs or mitigated FVGs. So take a look at this. On the 1-hour time frame, I'm not going to explain this one now. I will explain it later in subsequent videos. Now, did you notice price creating 1, 2 steps? So you could see this step here being created here. Price taps on the FVG. Like I said, when price taps on the FVG and a bearish candle shows beneath the FVG, you could see this bearish plus maybe price. So for those of you who cannot see it clearly, there is this indicator that also supports these steps for me. So I use order flow, ICT order flow. Now you could see step 1, step 2 before FVG. Look at this, step 1, step 2. So we are having those lovely steps being created. It has to be created. But in a case where we just see a straight impulse price move towards the FVG, I don't bother. Inducements needs to be created. All right, look at this. Sell, another step towards the FVG. This was 265 pips, 248 pips. So this is super, super amazing. But just a quick one on how I took this trade. So when you go to the daily time frame, right? If you go to the daily time frame and you look at this clearly, so I'm going to take away, shift this line. Now, you see this bearish candle that closed. Let me zoom in very close. That closed beneath the FVG. So if you put a line at the tip, indicating when it is broken officially by another candle, you can take your entry at that break, well, at the other block on the 1-hour time frame. So let me explain. Take a look at this line, which signified, this candle here signified the break that price, after this bearish candle formed, all right, let me zoom in closely. After this bearish candle formed, a line was placed beneath it, signifying that, okay, if price goes beneath this bearish candle formed, which happened here, body broke that line, it's signifying a downtrend, right? You go to the 1 hour time frame to look for what retest. So you go to the 1 hour time frame, then let's go back to that star guide. I'm going to now see where that we marked, isn't it? And see where the break happened. Now, this other block was here available for us to use it. So that was how this particular trade was taken. But I will explain deeply. These are a bit more advanced techniques, not really advanced, but not everybody might get it, especially those who understand CROT. It will make so much sense for them. But let's keep things simple as to why this lesson is happening. So currently on GBP USD, if you notice, price is reacting at an FVG, right? But we need it to close above the FVG. So it's more like we are going to be looking at GBP USD the next day. When this happened, we waited till the next day for new FVGs on the 1 hour time frame to show. And then that structure has to be created before price stops on the lower time frame what FVG. It makes so much sense. Multi-time frame analysis, lower time frame liquidity structures, and you're entering from FVG. So why is this good? Because you have your sentiment price reacting at a bearish FVG on the higher time frame, you're only looking for sales. Price reacting at a bullish FVG on the lower time frame, you're looking for buys. I think I will do the derive MT5 version of this, right? Getting slightly tired, right? So let's see if we have one more example. Okay, so this actually hits my take profits. So this is GBP JPY. I might not explain all these other two examples, but let me explain this current one that happened today. So you could see we are still on a what daily time frame. This is 1 day GBP JPY. We saw how price reacted at this FVG. You see this guy closed above, sorry, beneath the FVG, indicating that all right, so we are in a bearish bias. I switch to the what 1 hour time frame. And what am I looking at for? Steps. So we have this step, and this step. You could see step 1, step 2. Price got into that level, FVG on the 1 hour time frame. Now, when price got into this FVG on the 1 hour time frame, and then it created bearish candles beneath this FVG, I took it, and this was 334 pips. Good money. So let's go back to the 1 day time frame again, and then see other examples. So we had a case study here where price reacted at this bullish FVG, and so let's go to the 1 hour time frame and see how we got that entry. So I think there were, so this was the break and retest entry, which we had here, where if you go to 1 day time frame, you would see, let me just show you. That was not an FVG trade. That was similar to the sell example I gave you. So if we shift this line, you'll see I placed a line at this particular what bullish candle that was just slightly above the what FVG, indicative that since we have a confirmed break of structure, if price retests it, it continues going upwards. All right, so let's look at this sell example over here. We had, it's still the same break and retest, so I wouldn't be doing so much with this. Maybe in subsequent videos I would do that. It's actually very powerful, right? So this was the break and retest, price reacting at the other block. So I think this is where we're going to call it a day. Let me see if I had another trade. Okay, USD JPY, this also did hit take profit. So price reacted at a bullish FVG, and then I switched to 1 hour time frame. You could see steps being created, step 1, step 2, price reacted an FVG, then voila, and that's it. So this is actually good, and it is effective because you are not going to bother yourself thinking, okay, when looking at the chart, are you looking for a sell or a buy? Once you have your overall sentiment, you are good to go. And I would do a video on the MT5 version, derived synthetic indices, because this is amazing. I just want to start off with this as a foundation, and then we build on it later. Thank you. God bless you.